It is Sunday, December 7th, 2025, and the markets are currently closed. We are looking at a closing price for BigBear.ai, ticker symbol BBAI, of exactly $6.93 per share, finishing the last session with a significant upward push that has traders and analysts scrambling to update their models. If you are looking at your screen, expecting the usual penny stock volatility or the typical AI sympathy play behavior, you need to pause and look closer, because what happened in the final hours of trading on Friday and what has been building over the last quarter is not just noise. It is a fundamental decoupling from the narrative that has held this stock down for years. The expectation for BigBear.ai has always been straightforward and, frankly, a bit dismissive. Retail investors typically view it as a small speculative cap that moves in the shadow of giants like Nvidia stock or Palantir stock. The belief is that when the sector heats up, BBAI catches a bid, and when the sector cools, it crashes harder than the rest. That is the expectation. The reality, however, is that BigBear.ai is quietly executing a structural pivot that the broader market is only just beginning to price in. We are seeing a divergence where the company is no longer trading on hype, but on a fortified balance sheet and a specific high-moat strategy in defense and digital twins that is shielding it from the broader tech volatility. When you open your Fidelity mobile app or check your Schwab Intelligent Portfolios, you might see a stock that is up significantly from its lows. But the percentage gain hides the real story. The company has effectively reset its financial foundation. Let's analyze the immediate price action we witnessed closing out the week. The stock settled at $6.93, but it didn't just drift there. We saw a surge in volume, trading well above its average daily turnover, indicating that this wasn't just retail traders on Robinhood app chasing a green candle. This was institutional positioning. When you see volume spikes of this magnitude on a Friday close, it often suggests that larger players, perhaps those managing Fidelity wealth management accounts, or institutional funds utilizing Interactive Brokers trading terminals, are accumulating positions ahead of a catalyst. The stock has broken through key resistance levels that had acted as a ceiling for months, specifically the $6.50 mark, and is now testing support in a range that was previously unthinkable just a year ago. The reality here is that the market is finally rewarding the company not for what it might do, but for the cash it actually has on hand. This brings us to the most critical yet overlooked aspect of the current valuation: the cash position. Expectation says a company of this size should be burning cash and constantly diluting shareholders to keep the lights on. Reality? BigBear.ai ended the recent quarter with a record cash and investment balance of roughly $715 million. To put that in perspective for those of you engaging in self-investing or managing an individual brokerage account, that cash pile creates a floor under the stock price that simply didn't exist before. It effectively removes the near-term bankruptcy risk that bears have been growling about for 2 years. When you have that much liquidity, you aren't just surviving, you are hunting. This liquidity was bolstered by their strategic financing moves, and while dilution is always a dirty word in online investment circles, in this case, the capital raised has been deployed to completely transform the balance sheet. We need to discuss the earnings picture, because this is where the smart money is paying attention while the algos get confused. The headline numbers showed a revenue decrease of roughly 20% year over year, coming in at $33.1 million against a prior $41.5 million. On the surface, if you just read the headlines on your SoFi investing dashboard, you would think the business is shrinking. Expectation says revenue down, stock down, but the stock is up. Why? Because the market is forward-looking, and it values quality of revenue over quantity of empty calories. The decline was attributed to lower volume on certain legacy Army programs, low-margin work that the company is likely happy to cycle out of. In exchange, they are pivoting toward higher-margin, IP-driven revenue streams like the Ask Sage acquisition and the Heathrow Airport digital twin contract that is shielding it from the broader tech volatility. The Ask Sage deal is particularly significant and likely the primary driver of this renewed bullish sentiment. By acquiring a generative AI platform specifically designed for the high security requirements of the defense sector, BigBear.ai has moved from being a generalist to a specialist. In the world of fidelity mutual funds and sector-specific ETFs, specialization commands a premium. Ask Sage is projected to deliver annual recurring revenues of approximately $25 million in 2025, which is a massive multiplier on its previous performance. This isn't just adding revenue, it's adding sticky revenue. Unlike a one-off government contract that expires, this is platform adoption. When the U.S. government or a major airport integrates your AI operating system, they don't just switch it off next quarter. It becomes infrastructure. Furthermore, let's unpack the profitability metric that confused so many novice traders. The company reported a net income of $2.5 million for the quarter, a sharp turnaround from a loss of $15.1 million a year prior. However, and this is where you need to be savvy, this profit was largely driven by non-cash changes in the fair value of derivatives. Essentially, financial engineering and warrant revaluations boosted the bottom line. If you are using interactive brokers tools to screen for profitability, you might see this and think the core business is printing money. It isn't, not yet. Adjusted EBITDA was still negative at roughly $9.4 million. But here's the contrarian take. The market doesn't care about the negative EBITDA right now because the trajectory of the cash burn is manageable given that massive $715 million war chest. The market is pricing in the future profitability of the new acquisitions, not the current burn of the legacy business. We have to talk about the Heathrow Airport contract because it serves as the perfect case study for their digital twin technology. Most investors still think of BBAI solely as a spycraft stock for the CIA or DoD. While that is their heritage, the commercial application at Heathrow using Vision AI to manage passenger flow and security at Europe's largest airport validates their tech in the commercial sector. This is the reality checking the expectation. The expectation is that defense tech is too secret to scale commercially. The reality is that BigBear is deploying it in one of the busiest public hubs in the world. This diversification reduces the risk of relying solely on the lumpy nature of government contracting, a nuance that is often discussed in fidelity brokerage research notes but rarely makes it to the mainstream chat boards. Now, I want to take a moment to address the retail sentiment and the technicals. If you are trading this on Robinhood crypto or equity accounts, you have likely felt the frustration of the chop. The stock has spent months consolidating, shaking out the weak hands who bought the hype in previous years. But looking at the chart now, the $6.93 close puts us above the 50-day and 200-day moving averages, a golden cross scenario that technical analysts drool over. This invites momentum traders who don't care about the fundamental business, they only care about the trend. This creates a self-fulfilling prophecy where buying begets buying. We are seeing increased chatter on investing sites and forums, but unlike the meme stock frenzy of the past, the discussion is more sophisticated, focusing on the enterprise value to revenue ratios and the strategic value of the Pangium and AskSage integrations. Let's shift gears to the macro environment. We are in a period where global geopolitical instability is unfortunately high. Defense spending is not discretionary, it is mandatory. BigBear.ai sits at the intersection of kinetic warfare and digital intelligence. The U.S. Army and intelligence agencies are drowning in data, but starving for insight. They don't need more data points, they need AI that can explain what the data means. This is BigBear's sweet spot. They provide the orchestration layer. While companies like Tesla stock or Apple stock are fighting for consumer wallet share, BigBear is fighting for a slice of the National Defense Authorization Act, NDAA budget. That budget is recession-proof. Whether the economy has a hard landing or a soft landing,